The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is Monday, the 14th of January. My pleasure to be here Monday, Tuesday, Wednesday, Thursday and Friday, 11 o'clock until noon, and Eastern Time, right here at this time. The time that you're listening right now, that's the time that I'm here every single day of the week. Now, just let me finish doing these little notations on the ChapmanWave, and I'll be done, and I'll be ready to go. There it is. Okay, good. So, thank you, Steve, for 2 great hours. Let's just go straight into the market as it stands right now. We've got the Dow. Remember I spoke about the ChapmanWave stalk leg formation. It isn't just a formation. It is a psychology. It is a mantra of buying the dips and buying the dips and buying the dips and buying the dips. Every time the market pulls back, instead of having that 3 to 5 day consolidation, it has a 1 to 3 day consolidation, and most of it is intraday. Well, we're seeing that right now. The Dow is up 3 at 13,491. I mean, anyone in their right mind would say the market is due for at least a 1 to 3 day pullback. But what happens is we keep seeing these. My reading, as I see the market at this particular point, is that the public is starting to come in. They are now convinced that they're going to get nothing from the bonds, and that there's every reason to think that the market will produce for them something. They're not sure yet what it is, but there is a migration from the fixed income side into the stock side. I have a difficult time being able to specify exactly why I'm looking and what I'm looking at. It's just this amalgam of different things at the back of my head that I'm looking at. I'm looking at Ford and General Motors moving higher. America is on the move. This is really important. So, you know what's so funny is that if you go to Consumer Reports, there was this very interesting analysis of the percentage of cars that are called made in America, like Ford and General Motors. How much is made? And there's a Toyota that's really almost 90% made in the United States, and an American car, I couldn't remember which one it is. I think it's a General Motors that has a very little that's made in the United States, but it's got an American, it's an American name. So isn't that interesting? So it's all perception. Well, this is also very interesting because we've got the Dow now up 6 at 13,494. The S&P is down 3.5, and I've spoken about this a dichotomous market where there are certain sectors and certain stocks that have been absolutely fantastic for a long, long time that are making what I call the hat trick top. And those stocks, like an Apple, like an AutoZone, there are a number of stocks in that category that I think are just are going to have a tough time, and therefore leadership has to move to a different area. Don't forget, there's a webinar coming up, Ken Shreve on leadership. In fact, just that very point that he's going to be discussing in great detail. It's a webinar coming up this week. So please check it. I think it's Thursday night. So don't forget. You know, we have some wonderful, wonderful hosts here at TFNN, and each one presents what they've spent, their market lifetime on studying. And I really recommend, getting that information, getting just a sense of what other people are looking at and how you can use it to your best advantage. So what we've seen now is that the S&P is down a little bit more than the Dow. There are some Dow components. I probably could check it out right now, but I don't want to take that time. I'm just at a quick glance. UTX is still acting beautifully, and Cisco's bouncing, and Boeing is coming back nicely. So, and there it is, and Triple M. My 4 horsemen are GE, IBM, Triple M, and UTX, and the latter two are just stellar performers. So, let's go on. And what we're looking at here is that in the Nasdaq, even though Apple is down, and I'm going to talk about Apple in a moment, so I'll talk about Apple right now. Apple is bouncing back after making a new lower low. So lower highs, lower lows, lower highs, lower lows. That's what I've been looking at for some time. Arch formation in the monthly, weekly made a peak E in the monthly, hat trick top, peak D in the daily. The Dow daily, the Apple daily has just made that dreaded H pattern, which says when you have been testing the left side low, if you suddenly break below it, the bar that breaks below, this is in my CD introducing the ChapmanWave methodology, the bar that breaks below, be careful, because sometimes that's the bar that just wants to, it happens so suddenly that it wants to bounce back into the arch formation, just to say goodbye to its friends in that whole area. For the Apple, it would be up in the 500s, 505, 511 area. And how it bounces back is going to be really critical. My gut feeling is that I've got much lower prices for Apple, but I think it's getting a little bit worn along in the tooth on the hammering the short side right now. I wouldn't be surprised if there's just a little bit of a bounce before it actually makes its way back and goes into the 400s. So, okay, then we've got gold is up 6. I just don't see anything in gold. Hey, there's something else I'll talk about. I'll talk about it this week. I don't have to go to it right now. But gold is up 6 at 1667. Silver's up 46 cents at 30.87. Now, high-grade copper is down 70 cents at 3.6. It's just stuck in that range. I needed to get to the 4s to really show international improvement economically. And if it just stuck here, it says, okay, be careful. And we've got bonds are up 11.30 seconds at 145 and 20.30 seconds. This is going to be a very important week in bonds in terms of levels on the TLT, the Lehman 20-year T-bond fund. Let's go to Jim in St. Pete. Hi, Jim. How are you?
Very good. Thank you, Basil.
You would like to look at?
I'd like to look at ABX, Barrick Gold.
Oh, okay. Now, I just needed to ask you, do you have a position in ABX?
I do have a small position. It's
okay.
A long-term small position.
Is it, are you making money right now, or are you in a losing position? And if you're in a losing position, is it something that you've held for a while and now it's down much, or it's just something you're very comfortable with? I just need to know, because there's certain things that I want to look at here.
Yeah, I'm very comfortable with it because I'm flat right now. And I just think it's near a bottom. That's what I think, and so I'm just holding it right now. But I got in about a month ago or so, about the same price it is now.
Okay, now isn't that interesting? Because gold itself in the past month has declined quite substantially. The GLD has declined quite substantially, and if you're looking at ABX, which is Barrick Gold, used to be called American Barrick, if I remember correctly. That's why I got the A there. Anyway, it's now called Barrick Gold. On a monthly basis, let me just check. I'd like to see if I've got my black chart still notated. Well, I know it's notated. It might not be the one that pops up here. ABX. Nothing. Unbelievable. Every one of the gold charts I've done in great detail, but I'm not showing it. So it doesn't matter. What I'm going to do is go to the chart that I have notated. From the last low where it touched the 200-period exponential moving average, that was back in 2008. It was October 2008, went to 1727, had a higher low bar in November at 19.11. That started at peak A. Well, it was an A minus because it had what I call a restart in the ChapmanWave. Then it went to peak A, B, C, hung around, walked the 9-period exponential moving average, and the monthly chart then to peak D, and then made a cup formation at the top, what I call a drop bucket in my ChapmanWave methodology. It does a retest of the top. It just fractionally breaks above it. This is almost like I was talking about the daily on the downside, making the retest at the bottom in a arch formation, and here you've got a cup formation, and it fails. So it goes December of 2010 goes to 55.72, pulls back under the 9-period moving average to 42.50 in June of 2011, and then it has a very quick spike to, I think I can remember that, 55.72. It goes to 55.95. That is 15 cents higher, only 15 cents in a monthly chart, almost over a year later, and it fails to hold and it breaks down. That pattern says be careful, because if it takes out the cup formation low, in this case 42.50, the month of June of 2011, there could be a 1-to-1 to the downside. So let's just draw it in 1-to-1. And I believe that it is just, here we go, 1-to-1, down to there. Yes, that's it. So the 1-to-1 would have touched the 200-period moving average at 44.25, and now it's a 200-period moving average that's rising. So it actually comes down to 31 round number low, bounces to a peak A, and now it's retesting, and it's so close. Now I've got to get rid of this in case it looks like something that actually was price movement. It wasn't. There is something so interesting because it's trying to turn the 200-period exponential moving average, which is at 30.45, into a support, a trampoline bounce level. So the monthly chart is showing that there's a potential W formation in the fast-moving average of the MACD. For those of you looking at Tiger TV, this is the monthly chart right here, and this green line moving average is the fast-moving average differential between the 26 and 12-2 moving averages of the MACD. The red line is the slow-moving average. And now the stochastic is trying to make that W formation as well. And the on-balance volume actually had a slightly higher high recently with the price. So far it's saying there's an H formation that is forming. The pattern that I call the dreaded H, I'll draw it in now so everyone can see, is the one that we got to really be careful of, because if it takes out and then closes underneath the left side low of 31, I think I said round number 31, yes, if it closes under that in January to early February, there's a really good chance it's going to go all the way to this long-legged candle of March of 2009 to the 2554 area. Right, so since you're talking long-term, I'm talking long-term. We want to be doing apples to apples. Now, of course, the price of gold has something that's very important, and I do have gold in a bear mode in both the monthly and the weekly charts. So that says to me that I can expect lower lows, and my thinking here is that it's going to be lower lows in time and price, but it doesn't say how much to the lower lows. So it might be that actually gold starts to hold very well at a certain point. I don't know yet, but what I wanted to do is in ABX, the pattern that we've seen is distinctly lower lows and lower highs right up until the low that was made at 31 on the week of the 27th of, that was 27th of 2012 in July. And then it ran up to the 200-period moving average resistance, hit 43.19, 41.03. Around, it was actually a little higher at that point. Well, the 200-period moving average was a repellent line. But now you can see it's trying to form a little base. It did not go to a lower low. This is the first time it's taken 1, 2, 3, 4, 5, 6, 7, 8. Let's just talk about the bottom, not the actual move down. 8 weeks at the low without making a new lower low. So far, I think you're in the right ballpark of thinking about it in terms of stability. But now we need to talk about the daily chart, because the daily chart is like the rudder, and the engine is really the monthly chart, and the momentum is what we need to look at, and what will happen in a balance and how you can handle it. So we'll be right back. We've got Jim from St. Pete, Florida, talking about ABX, and
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and will be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman, Tiger Technicians Hour. This is the Monday edition. Monday, January the 14th, and the Dow is up 5. S&P's down 3.43. And we are on right now with Jim in St. Pete. And I thought it was really worth taking a detailed look at this stock because it has been, excuse me, it has been a really good winner. It had been a fantastic winner at some point in that whole cycle, that huge cycle in the gold cycle. And now it's just kind of stuck. And what I want you to point out to Jim, who has a position which he's treating as a more intermediate term position, unless, of course, he has a stop in and the stop gets taken out. But in the meantime, what I'm looking at is that there's a pattern that's been taking place, and I call it, it's where the H, the lowercase h, it's the visual thing, the lowercase h, let me just draw this in right there. It's a sloping back, sometimes almost straight to the downside, but it's a sloping back. Let me change the color so you can see it nicely. What color will I do it? Yeah, I don't even know. In the black background, I've got all these choices. Now I'm going to take it pink. Pink is too close to red. Anyway, you see that back? Well, now you've got an H. Well, there's one H and there's another H. In fact, I'm going to do that because I like to be very, when I have patterns that repeat, I like to be very strict about them. And the H pattern, the lowercase h, can turn into a lowercase m. So is a continuous arch formation. And the low that was made at 32.87 the week right on the 26th of November has only been able to trade up to about the 35, 36 area, and then it pulls back. But it hasn't broken yet the 32.87. The lowest it got to was 32.81. It has broken it. Oh, that was very important to see. So let me put that in. 32.87, and this is 32.81. Aha! I'll tell you why it's important. In the pattern of the H that goes to an M formation, at some point, invariably, there's a point where it takes out the left side low, and then it closes above it. That allows it to rally, but not decisively take out the left side arch. That's usually the case, unless the technicals are really strong. Well, in fact, in this case, it went to 35.65 was the high of the 23rd of November. It went to 36.08. And it held, closed at 35.53. So 35.53 is above. No, it isn't. 35.65. Yeah, it didn't close above. So this to me is very important. What it's saying is that was the move that if it was going to take off on the upside, it should have, that candle of the 3rd of January should not have happened. It should have been the exact opposite, and this should be trading right now towards the 38.19 200-period exponential moving average. So I needed to do that, and I needed to go into it closely to be able to see the pattern that I was anticipating, but I was surprised that it actually had happened. And that was the left side low was going to be taken out. So this is what I'm going to recommend to you. I don't want to interfere with your thinking about the intermediate term. Let the price do that. In other words, even though I'm anticipating it's just going to bounce within a trading range of, this is going to be, if I can't do it this week, if I can't get above 35.10 or 35.15, close above it, then I think it's definitely going to make lower lows and lower highs in this time frame. So I don't want, as I said, I don't want to mess with your position. I want you just to have your thinking is what's really important about it. The monthly tide says that there's an arch formation, and everything about it says that at some point within the next 6 weeks or even sooner, it should test, if it takes out 32.50, there's a really good chance it'll only take out the 31 round number, but it's going to test 30.45, which is a 200-period exponential moving average. The only way it's going to save the day is by the candle of 3 weeks ago. ABX is what we're looking at. It's the 34.49. It needs to get decisively into that wick. Now, 35.22. If it gets to 35.22, then there's a good chance that it's going to try to test the high of 36.08. And what I would say to you, and just think of it in terms of your overall portfolio and everything. These are just words that I'm saying that are going along with my analysis, and the price movement will confirm one way or the other. My overall impression is that the gold stocks, some of them are near a kind of a good balance, but I think that gold is going to drag them lower. So that's my thinking. But price movement is the arbiter of trends. If, in fact, ABX is able to climb into the 35.22-ish area, I would just raise the stop on part of my position so that I'm locking in a profit on that part of the position. But most importantly, if this week, if it takes out the low of the 10th, 33.91, I would say to you, start tightening up at least a portion of your position just so that you don't start to see it going to the 32s and 31s. So I hope that helps you. But you know what? Let's talk again maybe in 3-4 days and see where it is.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. I was asked a couple of things. One is, I'm just doing it right now. Is that correct? Yeah, BC. D recycles up. Okay. There we go. Okay, so I just did a couple of notations on the some charts. This one I wasn't asked about, but it was mentioned in the den, and I actually had looked at it recently. I have no idea why the notation's not here, but that's okay. This is FLO, a good eye, Ken, in the den. You know, the den is a fantastic medium. You get great ideas. This is one of those right there. He was talking about flow. I actually remember him saying flow a long time ago. Flow is Flowers Foods. It's trading at 26.75, leg C in the weekly, looking really good. Monthly chart, and if I can do it real quickly, he's gone. I'll just do this right now. You can see. There we go. Okay, here we go. A, B, C, D. A, B, C, D. Okay. So this is acting really well. A strong leg D up in the monthly. This is a strong leg C. What did I say it was? C in the weekly. Nice. Got support at 2407. It's at 2674. But I was asked if I would look at the GDX since I was looking at gold. Now the GDX, you see, it's the same type of thing that I'm looking at here. In fact, it's so interesting that ABX and GDX, which is the gold vectors, I believe, the market vectors gold minus ETF, has very similar pattern to the ABXs, making that arch formation. And it says to me, yep, this one actually did touch the 200-period moving average a number of times. It's trying to bounce off it. Really important week, because if the weekly chart is able, with this higher level consolidation, instead of making a lower low and a lower high, it's making a higher low so far. And that's important because if GDX by Friday afternoon, we've just begun the week, it's at 45.48, he's able to clear 47.53, then we've got a nice counter trend bounce that could take it to the 49.24 area. My eye says it's a flat stochastic at 11%, and the MACD isn't yet ready. So the daily chart has to really do all the work. And the daily chart says, I've made a peak ABC and I'm failing. I've gone to a new low. I'm starting a brand new one. This is leg A to B. Nice action, but once again, unless this is at 40, what's the high today? The high is at 45.76. Unless it's able to get into the middle of this ugly bar of the 3rd of January, remember that's when gold really took a pounding. 47.06 was the high, 45.07. So let's split the difference and say 46, somewhere around 46.02. Somewhere around there. If this is able to get into the 46.02 and higher level by Tuesday afternoon, Wednesday morning, that'll be good. So, and I'm also reminded here that ABX is around 13% of the GDX. I guess that's why they look so good. Why? Look at that. Apple is a very big percentage of the Qs, Q. And Apple is making the big arch formation with a lower left side low. And the Qs have been impacted, but they do not have the same pattern. That's very interesting. That's what I've been pointing out to subscribers of my newsletter, the opening call, that the Qs have actually been holding up really well. And what happens occasionally, and this might be one of those times, is that we're seeing a rotation out of Apple into some other areas of the NASDAQ. If you want to look at, there are certain stocks that are holding really well. So let's go to our callers. We've got Brian in Franklin, Mass. Hi, Brian. How are you?
Excellent. Yourself, Basil?
Very well, thank you.
Hope you had a good weekend.
I certainly did. I had my tennis and I just friends. It's a very good movie, folks. I saw The Life of Pi. I say it's very good, only in that it is 3D, which I wasn't sure I'd be able. Depends on how it affects you, but I was very comfortable in it. And it's just a fascinating film. It's really clever. It's just, I don't know how deep it is per se, but just as entertainment, it was excellent. Got that out the way. I would have forgotten completely about it. Yep, I went to a movie. I'm not a big movie goer, but I got dragged along, but I enjoyed it. So you had a good weekend?
I did, thank you.
Oh, you're in Franklin, Mass. Did you go to the game?
No, I watched it. I live about 10 minutes away.
Wow, there must have been a lot of traffic.
Yeah. I guess it must have been, but I can see the lights from where I live.
It's fascinating. I do not play the sport, and I've watched it. I watch it periodically. But when you're an athlete, you kind of identify with things that athletes do. I mean, you just instinctively. And I have to tell you, I am always so impressed at this level of athlete that is so big, so tall and powerful and weighs a lot. The speed and the dexterity of these players is awesome to watch. It is really fantastic to watch. I don't care who wins or loses. It's just fantastic to see great athletes. Anyway, I got that out the way. Now, you wanted to look at
CMG Chipotle again. It seems, I spoke to maybe 10 days ago. It seems like it's under the $300 level. 290, 296. I'm just wondering, they're coming out with earnings 3 weeks from today, and I'm just wondering if you think it's, where it's headed.
Well, we were actually short in my newsletter. I wanted to keep holding it, But I'm really strict about the discipline of buy stops and stops. I didn't want, if it ran, I just didn't want to be stuck in it. So we took like a 1.8% loss on one position and 0.80%. It's really a very tiny percentage loss. I was, in fact, going to jump right in again today. And I'll tell you why I didn't. There was only one reason why I didn't. I needed to see today's action, even if I lost the chance of shorting at a prime number, which is that 300 number, because it went to 301.99, and I would have wanted it opened at 300. So I would have wanted to re-enter that short just about 300 with about a 3-point buy stop. The only thing that why I didn't is that if there was internal strength, if I was misreading it and there was internal strength, then all of a sudden, I don't know if you've looked at the weekly chart, but the weekly chart kicks in, and then you've got to say to yourself, whoa, it just needs 306.74 for leg D in the weekly chart, and the technicals were rallying. And it's only that was the only reason for me not to go right back in. And so you don't have a position right now, and you would be looking at this as a potential short, right?
Yeah, I would buy some February expiration puts.
Okay.
Like a 250, which is still selling on a premium, but I think they're selling for around 280.
So, if you were going to go that deep in the money, if you're going to go down to the way below 290, then I'm going to make a recommendation about that. I'm going to suggest that you just nibble on a position right now at 296. Be prepared. It's making the pattern that I call the H formation, which is really the one I wanted to see, and the 120-minute chart is confirming that. Be prepared that there are still many, many, many money managers out here who still consider Chipotle Grill, Mexican Grill, CMG, trading at 296.22, down 3.78, as a buy. I do not see that. I believe we've made a hat-trick top. It will not see the old highs of 442.40 in this cycle. That's my belief. Belief and facts are two different things. A fact would be if it spikes above 305, then all of a sudden it's got a very nice counter-trend bounce going on. That's why I'm saying start a position, because I know that you look at it, you're prepared to place another position if it is appropriate, and then the second series of whatever you want to do would come in at the opening, which is 300, round number open today. That's going to be a very important factor in my work, because even now, if it goes above 300, even 300.01, you've got to be looking at the upside. So round about a bounce of 298.90, if you can see that coming, and then all of a sudden it goes from 298.90 to 297. It drops about a point and a quarter or so. There you can add another small position on the put side. And then I would just hold firm, because if it takes out the low of 291.90, you could even think of adding a position on a bounce from there, because that would say, finally the weekly chart is going to be starting to fail. So. Okay. Just nibble here, wait for a bounce, maybe a 3-point bounce. Consider that's where you might add another little bit. You don't want to see it push above 302.19, the high of the 11th of Friday, and definitely not above 306.73, because that could allow for at least, this is a hot stock. So I think it's in the downtrend, but that doesn't mean it couldn't bounce to the 316 or 320 level.
Okay. No, I know it's strictly technical, but I think about the 2% payroll that people are gonna, not receive now. You wonder if they're gonna still go out and spend $7-8 for lunch or dinner there, and people aren't buying.
You've got a point, but that's been talked about a little too much. My suspicion is if the market rallies into the end of the week or into next week, it'll ameliorate some of that somewhat, because people will say, actually the market's doing okay, let's give it another month. But you could be right. We'll see. I would prefer just to look at the technicals, and the technicals are saying right now I probably should not have tightened my buy stop. I should have made it a little wider, should have stayed in the positions, because I think Chipotle is going to make that dreaded H. I believe it's going to test 291.70 very soon. So
right.
that's my thinking. Thanks so much for calling, Brian.
Have a great week. Thank you.
You too. Brian in Franklin, Mass. Right by the Pats performance yesterday. That was in. They are Foxborough. All right, let's go to John in Knoxville, Tennessee. Hi, John. How are you?
Good morning, Basil.
How are you doing?
Very well, thank you.
Good.
I called you last week about SIRI, and you didn't get enough time to really go over it. And I was wondering what your opinion is on it.
And it hasn't gone very much higher. And what I was saying to you folks, Sirius XM Radio Inc. is trading at $3.16. It's up, now it's down a point. It's making, I believe that I'm going to call this a peak F, but I don't really have the evidence yet. I need the whole day to conclude, and I need a much lower high tomorrow. I like this stock looking out, but I think that it's kind of overbought. It could get more overbought, obviously, but it's gone from the ones into the threes. It deserves a bit of a rest. Now the stock doesn't know that. You and I may be thinking that way, but it's making a potential leg E or perhaps a peak E in the weekly, and it's a leg E in the monthly. So this is my recommendation. Looking out, if you are prepared to have this as just a little part of your portfolio, and as a little part of your portfolio, you say, you know what, I'm prepared to pay almost the top tick of this recent move, because my real thing is that if it gets away to the upside, I want a little bit of it. That's fine. I don't have to make a big profit on it. I just don't want to buy top tick at my full position. So my thinking here is you could nibble at it here, realizing that the decent time to get in would be a test of the 290s, preferably 283 to 279, with a little bit of time, maybe a week or 2 or 3 of consolidating, so that it can build for another move to the upside, because everything about it is saying it is acting very, very well. My only thing is that in a $3.16 stock, you've got so much percentage risk if it goes down to 250. That's the only thing. So think about your overall portfolio. If you wanted to start a little position here, realizing it could get away on the upside and you don't have your position that you wanted, that's number one. But being prepared to say, you know, it's kind of choppy right now. On balance, volume's about to turn down. Stochastic's good at 86%. MACD is good in the week, in the daily. The week, everything about it is great. You just want one sudden swoon to the downside, bad news or whatever it is, and that's where I would start the better part of my position. So what I'd said is, underneath, obviously it might not get there because it's been a spectacular move, and 297 is the 9-period moving average. So maybe a little nibble again at 297, but then be prepared to at 283, put a bid in at 283 to 282, like that. Those are the three positions that I would. A nibble now, a little more at about 297. I'd prefer 293, and then another little bit at something crazy, something like, something between 282 and 275, something like that. And if you don't get the final position, that's great. You're in the position. I tell you why. Because if it starts to act very well, you could even add to the position as it's moving up, making higher highs and higher lows, which is what it's done. We just want a little period of lower highs and lower lows to have a safer entry. But you're looking at it as a longer-term hold, right? A buy and hold.
Yes.
Yeah,
I think like a lot of these cars now, it's built right into the car when you buy new cars. And with Hurricane Sandy and other...
it's just going to force people to say, you know what, I'm going to try it. But I know from experience from different people that I've spoken to that they can sometimes be very desperate to get people to sign on. If you say no, they will call you back and say, well, then we'll give you 3 months free. And a friend of mine said no, and they almost gave him, I think, he got 6 months free. And when they called him back again to sign up, he said, you know what, I don't think I want it. And then they were prepared to give it. So I don't know what about their business model, but I think as a stock, I think you've got something there, and I agree with you. It's put into the cars. You have to actually unsign. I think you've got the right idea. So that would be my plan of action.
All right.
Hope it helps you.
Yes, it does. Thank you, Basil.
Thank you. John in Knoxville, Tennessee. We'll be right back. Dow's up 11, S&P's up minus 2.8. Basil Chapman, Tiger Technicians Hour, 877-927-6648. Still a good time for calls.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman. I had a question. Would I look at eBay? Yes, eBay. There are a couple of things about eBay. First of all, there are a number of stocks that were former really big winners that were just in the doldrums and have had a spectacular move on a percentage basis. This is not the historic move, but eBay is one of those. And eBay in the monthly chart, once upon a time, it IPO'd in September of 1998 at 2.23, and low was 1.71. Of course, this is split and pre-split and post-split and whatever. But the fact is, it went from a low, we can call it 1.05 in October of 1998, regardless of whether it was split or not. Let's call that the price low. It screamed up to 29.25 in April of 1999. Pullback went to a peak B minus in March of 2000 at 31.88. Low was 18, round number. The close was 22. It took both those out. It went all the way down to the 6.69 level. Then it started peak A, B, C, D, E, F. And then the pattern that I talk about, which is where it's a right arm extension, where one of the technicals takes it high. It's usually the fast-moving average of the MACD, but the slow stochastic is not confirming. That's exactly what happened. We went to peak G high of 59.21. Now, I have a cup somewhere from the year 2000 with all the printer with a ticker around it. And I know it's got eBay. I can't remember what the price was. It was much higher. Anyway, it comes down, trough A, trough B, trough D, trough C and D, right there. March of 2009 at the general market low of $19.91. So it goes to peak A, B, C, D at 35.35 February of 2011, pulls back. You see the white line. The reason why I want to use the black chart, you see the white line, how beautifully you can recognize that 9-period moving average. So the question is this a short? And I have to tell you something. I don't see it yet in the monthly chart at all. In the weekly chart, I'm seeing signs that, yes, it's getting a little toppy. I've got it at a new, either it should be F/B. So there's an alternate wave count. And here the technicals, the stochastic is actually quite good, but the MACD is saying, hey, upside is fairly limited. Be careful. So the question is, on a shorter-term basis, would I be considering shorting eBay? And I have to tell you, I think there are better stocks. I've got a feeling, and it's just a feeling, I can't really put my finger on it at this point, that some of the fund managers are looking at some of these oldies as doing well, and they're safer, and they've been around the block, they understand their models, therefore they can hold up better. That's just what I'm thinking. I don't really see it as a short. Why? Because yes, it could pull back, but it has such strong support in the rising trend line of 51.89, and it's at 53.20 right now. I don't think I would short this. There are other stocks that are looking much weaker, and I also would go with the weaker stocks, the stocks that haven't participated. Those are the ones that I'd be looking at to short. So, yeah, maybe as a very quick thing, or maybe an option trade this week, but I personally would stay away. I think it's it's making a high-level consolidation there. If it takes out you're thinking of closing the gap between 52.04 and the high of 51.19 on the 31st of December, yes, but that's still only a point or two. I'm looking at something for a really decent short, talking about it as a weekly, monthly short, and that's that hat-trick top, and I do not see it. So I would say step aside. There are definitely better shorting positions right now. Now, I wanted to do this. We've got just a moment. We've got the Great Panther Silver giveaway coming up. There's a whole bunch of things going on here. Go to the front page of TFN, and my service is the opening call. The opening call was very comprehensive look at the markets. I gave charts on all the different indices that are very important, different stocks that are important, plus the ones that we own as much as I can in the different time frames, usually 3 time frames: the daily, the weekly, the monthly, and the 120 minute. You might just want to give it a try, because it is really comprehensive, and it gives you that market perspective as well as the stocks that we have. And we are, at this point, we are still long 3 stocks. You're trying to look for a couple of shorts to get in these hat-trick top stocks. That's it. Maybe we're long 4. I can't remember offhand. So consider it. Thanks for tuning in, and stay tuned.